Ladies and gentlemen, good day and welcome to the TD Power Systems Limited earnings conference call. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Devrishi Singh of CDR India. Thank you, and over to you, sir.
Thank you, Stephen. Good morning, everyone, and thank you for joining us on Q2FY22 earnings conference call of TD Power Systems Limited. We have with us Mr. Nikhil Kumar, Managing Director, Mrs. M.N. Varalakshmi, Chief Financial Officer, and some of their colleagues in the management team on this call. We will begin the call with brief opening remarks from the management, following which we will have the forum open for an interactive Q&A session. Before we begin, I would like to mention that some of the statements made in today's call may be forward-looking in nature and may involve risk and uncertainties. Documents related to the company's financial performance have already been emailed to all of you earlier. I would now like to invite Mr. Nikhil Kumar to make his opening remarks. Thank you, and over to you, Nikhil.
Thank you. Good morning, everybody. Thank you once again for joining us today on our earnings call. I trust all of you would have received our results and investor presentation. Now I'll move on to discuss with you the TDPS financial performance for the quarter and half year ended 30th September 21. Standalone first. Our total income on standalone basis for 6 months was rupees 3.21 billion versus rupees 2.13 billion for the same period in the previous year. Profit after tax and comprehensive income for 6 months is 169 million versus a profit of 15 million same period last year. Manufacturing revenues for 6 months is 3.06 billion versus 2.01 billion. Exports and deemed exports contributed to 47% of manufacturing revenues. Manufacturing order book including Turkey stands at 10.1 billion, out of which 3.53 billion is our generator business, 6.32 billion is railway business, and rupees 0.25 billion is the Turkey business. Export and deemed export is about 61%. The order inflow
We request all the participants to please stay connected while we reconnect the management. Ladies and gentlemen, we apologize for the delay. The line for the management is reconnected. Thank you, and over to you, sir.
Could you tell me where it got cut off?
So soon after, in maybe a minute, once you started with your speech.
Okay, then I'll start all over again. Sorry, ladies and gentlemen. So I'll start all over again. Standalone, our total income on standalone basis for 6 months is 3.21 billion versus 2.13 billion in the same period previous year. Profit after tax and comprehensive income for 6 months is 169 million versus a profit of 15 million same period previous year. Manufacturing revenues for 6 months period is 3.06 billion versus 2.01 billion. Exports contributed to 47% of manufacturing revenues. The manufacturing total order book including Turkey stands at 10.1 billion, out of which 3.53 billion is the regular manufacturing business, 6.32 is railway business, and 0.25 is the Turkey business. Exports and deemed exports constitute 61% of the pending order book. Order inflow statistics. 6 months order inflow is for TDPS India and TDPS Turkey together 2.96 billion rupees versus previous year 2.48. This is the highest order book for the manufacturing business in 6 months in the history of the company. Order inflow from exports is 163 million. Project business revenue for 6 months is 0.12 billion versus 0.05 billion same period previous year. Order book for the project business stands at 0.18 billion. On a total Concall basis, our income is
$3.95 billion versus $2.61 billion in the same period in the previous year. Profit after tax for 6 months is $242 million versus profit of $88 million last year. Concall order book is $10.28 billion. We continue to have a strong cash position of 2.15 billion rupees. Now I talk about the order book, market situation, and guidance. Our order inflow in the first half is the highest in the history of the company at 2.96 billion, out of which 46% is domestic and 54% is export. We are seeing all-around increase in demand in all sectors of our business, with the highest demand coming in from the steam turbine segment and the gas engine segment. In the export side, gas engine and steam turbines, and to a lesser extent hydro, have been the sectors where we've seen huge demand. We would also like to announce an order that was taken in October for 10 units of 15 megawatt generators for gas turbines for the US shale gas oil market. After a long time, we have seen a revival in this sector. The gas engine business is robust, with strong order inflows in this quarter, and we have received equally good forecasts in the next 12 months. There are also a number of steam turbine and hydro projects in the pipeline. Overall, we are still very bullish in the export business and continue to see strong order inflows. Power shortages and expensive grid power is also leading to more inquiries for smaller captive power plants with gas engines and gas turbines, and also steam turbines with renewable fuels like biomass and garbage. Domestic. We are seeing a big growth in domestic demand from the steam turbine segment and hydro segment. We expect this growth to accelerate with the capex cycle still at the early stages. Power shortages in India, expensive grid power, with spot prices reaching almost 15 to 20 rupees per unit, means that captive power is here to stay in India for many years to come. Underinvestment in baseload power for the past 8 to 10 years, coupled with high expected GDP growth, limitations of wind and solar as an alternative, will fuel demand for captive power plants for the foreseeable future. This structural imbalance in the power sector in the country will take decades to balance out. We are now happy to announce an order in a new segment. Last time we spoke about synchronous motors. This time we would like to share some details of repair of large wind generators supplied by an international company to the Indian market many years ago that has found to have a latent defect. Latent defects are defects that show up after years, well beyond the warranty period, but are serial in nature. There are a total of 500 machines installed in India that will be required to be repaired in the next 7 years. We have got the order for the first one. Once we dispatch this machine in the next 6 weeks, we expect to get a big size of the overall demand for the next 5 to 7 years. There's limited competition due to the large size of this machine. In particular, we have found that our two-pole factory is very well suited for this business. Finally, we get to use those assets productively. Such kind of manufacturing capability is only available with TDPS and a large PSU in India. We expect the segment to provide consistent business for TDPS every year for the next 5 to 7 years. The overall size of this market, as discussed, is 500 machines, and value could be around 750 crores. Turkey. Most of the business from Turkey for this year is almost completed, and we expect only another 1 to 2 million euro sales in H2. For next year, we're expecting around 3 to 4 million euros of sales. Market situation is buoyant, and recent power shortages is making smaller captive power plants with gas very attractive since they have a quick gestation time. We continue to expand our footprint in existing areas of business, and the new segments that we have will give a big boost to growth for FY23. Order inflows, inquiry levels at an all-time high, so the momentum continues. The only gray area continues to be further escalating raw material prices and transportation costs and the impact on gross contribution. We are negotiating another round of price increases with all our customers. There's no choice but to pass on this impact to the market. We think that the prices of copper will continue to be high and be driven higher, but steel should correct But at the moment, we do not see any signs of this correction, and therefore the market will have to absorb the recent price increases. Starting from Q4 into next year, we will see significant improvements in the gross contribution margins of the company. Guidance for FY22. With increased order inflow, we expect to outperform our initial guidance indicated in the previous call. We are now expecting a top line in the manufacturing business of 6.9 to 7 billion, with an EBITDA margin ranging between 10 to 11%. We expect to do around 4 billion in Q3 and Q4. This will be the highest sales of the manufacturing business in the history of the company. TDPS Turkey will deliver a top line of 0.8 billion. Total manufacturing top line, including Turkey, will be then between 7.7 and 7.8 billion. The projects business will have a top line of only 0.25 billion. All our subsidiaries will be profitable, except the US subsidiary, which will be break-even on an EBITDA basis. This brings me to the end of my initial remarks. I'll now be happy to address all queries that you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity. Nikhil, if you can talk about some of our new initiatives, how are they, panning out on the railways and synchronous motor side? Any further development on those two segments? And the after sales of the wind is fine, but you were pretty optimistic about the after sales opportunity on the steam generator and other generators as well in the last call. So if you can talk about this as well, how is that shaping up?
So with the synchronous motor business, there is a good inquiry pipeline. At the moment, it's around 200 crore pipeline that we are active pipeline, I can say, which will be finalized in the next few months. We expect to get a good proportion of this. So that is switching strong demand in this sector. All this will be for business for next year. The Indian Railway business, we are going to deliver the first set of products to them this quarter, and they will be mounted on locomotives by hopefully early next year. And then we will get qualified exactly 6 months after that. So I think by end of Q1 next year, TDPS will be qualified in the Indian Railways, and then in the remaining 3 quarters, we can expect to get some business from Indian Railways. It will be, of course, in full swing in the following year. And the last question was about the wind segment. Yeah, we have entered the segment. It's going to deliver good margins for us, and it should provide steady business for the company for the next 5 to 7 years.
Sure. And, you did talk about the after sales of the other generators, steam generators, gas generators, particularly the steam generators that we had installed for our customers during the past 10-15 years. I think they must also be coming for refurbishment. Can you throw some light how this?
My colleague, head of sales, Mr. Vinay, to just talk about the other steam turbines.
Sure.
Yeah, you are talking about the replacement and refurbishment job of our machines supplied 20 years back?
Yes. Yeah.
So we have a fleet of around 5,200 generators now supplied over 98 countries worldwide. And slowly, since last year, we are seeing a significant increase in the repair business, and we are also doing the replacement business. So recently, we got one big order in hydro refurbishment segment. So we are going to repair and refurbish 3 big hydro generators of one of our competitors. So this business is going to grow because our machines are getting older and there are a lot of competitors' machines as well. So we are now, discussing. There are more than 150 Chinese generators in India. So they are also now failing. So customers are approaching us, and this is going to continue, and there is a good potential in this segment as well.
Okay, and how big can this be opportunity over the next few years for us?
It could be around 30 to 50 crores per year. Not including wind repair.
Okay, so wind can be another 30 to 50 crore opportunity if we, apart from this.
Yeah. Yes.
Yeah. So, and Nikhil, I know like they on the standalone basis they have done close to 190 crore of revenue compared to let's say 138 crore which we did in last year's Q2. So if you have to look at it in terms of volume, so there will be two elements which will be playing out. One would be the increase in realizations primarily due to increase in raw material prices, and another would be the volume growth that you would be seeing. Any idea how much would be, I know it is very difficult to give because we have a lot of segments, but if you can broadly tell us how much will be the volume growth in Q2 of this year?
No, see, in Q2, as we discussed last time, Q2 and Q3, we definitely have the impact of the raw material prices on the gross contribution because of the decision that we took to share some of the impact with our customers. Primarily, I would say our steam turbine customers in India, where we are taking an impact. And but as mentioned in the previous call, we have also discussed with them price increases, and for all new orders that are coming in, these new prices are effective, but those will start getting delivered only from Q4 onwards. So I would say, although there is a overall, you can say, gross contribution has shrunk in Q2 by 4%.
Yeah.
That's the entire impact of raw material price increases.
Sure. And lastly, on the guidance for next year, you did talk about guidance for this year. Any change in guidance for next year as well?
We tend to right now. I'm saying that the order inflow is really strong across all sectors and both domestic and exports. So that's one part of it on the existing generator business. Then there is new segments that we're talking about: synchronous motor, strong inquiry pipeline, also this wind repair business, and we are going to talk about other sectors as and when we get into them. I can give you a firm number guidance in February, but all I can say is that it will be good. So we are very bullish and excited about the next year's performance.
Okay. Thank you so much, and wish you all the best.
Yeah.
Thank you. Before we take the next question, a reminder to the participants, please limit your questions to 2 per participant. Should you have any follow-up, may we request you to rejoin the queue. The next question is from the line of Rohit Balakrishnan from iThought.PMS. Please go ahead.
Hello,
Rohit.
Hi, Nikhil. Many congratulations on another quarter, which is very, very encouraging. So Nikhil, just wanted to understand this repairs business. I think you answered it in the answer to the last participant question. This business, you mentioned this is a 750 crore business as from an opportunity standpoint. Is that, did I hear it right?
Yes.
Okay. And you said that there are only a couple of players, TDPS and another PSU. So, what kind of market share are you looking to sort of eye in this business in the next maybe couple of years?
Yeah, so it's going to take, I think Vinay has answered this question indirectly when we answered the last question. It could be let's say 30 to 50 crores per year.
Okay, got it. Understood. So okay.
It all depends on how many machines are actually going to be coming down for repairs also. Because we're also seeing the customers are actually waiting for the machines to fail, and then they bring it down. So the defect is there, but many of them want to postpone it to the last moment.
Right. And so this this 30 to 50 crores, we are saying, if, again, just a clarification, this is for, so we have the wind generator is there and other steam generators is also, refurbishment is what we are also going after, right? So both,
yes,
you are saying could be individually 30 to 50 crores.
It will be 30 crores to 40 crores each.
Yeah, right. Each, right. Got it. Yeah, correct. Understood. And Nikhil, sorry, was just one more clarification. Can you repeat the what you had shared for the guidance for this year? I missed that. So if you can just share that.
Yeah, for the guidance, I said that I'm not putting a firm number. I just said that the inquiry pipeline is very strong for this year.
Yeah, for this year, right.
For this year, I said 6.9 to 7 billion for the generator business, and Turkey will be 0.8 billion. So total generator business will be 7.7 to 7.8 billion.
Got it. Understood. And next year you're not giving any numbers right now. Understood. And we can just, from a margins perspective, Q4 onwards, we will see the recovery in terms of our gross margins, right? Okay. And just taking this quarter, you had already communicated about the gross margin pressure earlier, but what was heartening to see was the below the gross contribution, the cost did not really increase. So this should continue going forward as we sort of, if we were to sort of get these kind of revenues, this should be possible. Is that fair assumption, Nikhil?
Yeah, so the next 2 quarters, we have to do 4 billion, right? So we have to do approximately 2 billion per quarter.
Right.
And there could be a small increase in, some of the variable costs like power, because they're running flat out. But in terms of fixed costs, manpower costs, all those things will remain the same. There could be some variation in the variable cost, but it's not going to have a big impact on the overall cost structure. So, yeah, we have the next 2 quarters will not have a big increase in the overall cost structure.
Got it. Fine, Nikhil. I think this is very helpful and all the very best. Thank you.
Thank you. A reminder to the participants, please limit your questions to 2 per participant. The next question is from the line of Dhruvesh Sanghvi from Prospero Tree. Please go ahead.
Hello, am I audible?
Yes.
Yeah. A hearty congratulations, and just a comment, Nikhil. Last 3 years, the voice that was missing has somehow resurfaced from your side. Is what I feel listening to so many Concalls now. And
yeah, thank you.
It's really amazing to see your strategy work so well. Again, from a 3 to 5 year perspective, in the last Concall, I think you had talked about a potential capex plan because we might hit our capacities. So any thoughts on that? And that's the only question.
I think that we are making investments to improve productivity and incremental line balancing, and we are going to push our available capacity to over 1,000 crores without going in for major capex at the moment. So we will flog these assets before we can take a decision to make some big greenfield investments. And at the moment, looking at the next, I would say 2 years out, I'm not thinking of putting any fresh greenfield. There will be capex, incremental capex in the factory. We could add a new bay. We could add new high-tech machinery. We could increase productivity. There are a lot of things that we could do within the factory to push this number, and that's our primary goal. We have to see how to push the production from the existing 2 plants and create ways to produce more and more from this existing 2 plants. We're not going to be rushing into greenfield at this point of time.
Right. One more follow-up. In continuation to this outcome, I think a natural outcome will be in the form of a buyback again, or have we thought about anything on that area?
At this time, these incremental investments can also be, we need to have cash for that, and we're preserving our capital for such kind of capex, as well as increased working capital requirements that we will have for the increased sales. So we may not have that much free cash after these 2 items to go for a massive buyback. And also the recent increase in the share price in the market has also can influence the decision to go for buyback.
Right. Fair enough. Thank you. Thanks a lot and best regards.
Thank you. In order to ensure that the management is able to address questions from all participants, please limit your questions to 1 per participant. Should you have any follow-up, may be requested to rejoin the queue. The next question is from the line of Dwanil Desai from Turtle Capital. Please go ahead.
Hi, Nikhil. Good morning. Congratulations for a very good quarter. Since it's only limited to 1 question, I'll put it, prioritize the one. Nikhil, if you can outline the repair and spares, what is the contribution today, and the new area that we are getting to, plus increased, repair possibility that we see in next 2-3 years. Where can it go, and what kind of impact it can have on the margins? Because typically these are high gross margin areas. So if you can elaborate on that.
Yeah, I will hand over this question to my colleague Vinay.
Yeah, I think I answered this before, and once again, I'd like to repeat. So one is the standard generators of our own machines, which are more than 5,200 machines running in the field. And another part is the repair and replacement business of our competitors. And one more new segment, what we have recently entered, what Nikhil explained, that is the wind turbine generators repair job. So what we expect is both put together, there is around 70 to 80 crore business in the coming years.
So as a percentage of sales, are we somewhere close to 5% today, and will it move to 10-15%? Is that the right understanding?
Yes. 15 may be a little bit stretch, but I would say 10%.
10%.
Yeah.
5% today, and it will become 10%.
Okay, and these are like typically 45-50% gross margin business. Is that a right way to look at it?
Yeah.
Overall, yes.
Okay, great. Thanks.
Thank you. The next question is from the line of Ritesh Chheda from Lucky Investments. Please go ahead.
Yeah, sir. I have one larger question. Just looking at the way capex is building up in the system in terms of opportunity and in terms of business. Our manufacturing and for a lot of capital good companies as well was fairly stagnant for some time. Do you see a situation where in this cycle you could at least double your revenues from the 550, 600 crores, 600 crores that we saw last, based on the strength of the business opportunity that you see over the next 24 months? And associated with that, now you mentioned that you already have the capacity up to 1,000 crore of manufacturing. So associated with this kind of revenue improvement, what is the kind of margin levers do we have when the business scale or size improves?
So first part of the question, whether doubling can take place, I don't really want to go that far ahead and say that the domestic recovery is going to be so strong that we can double our revenues in 2 years' time. I mean, if it happens, I'll be very, very happy. We are there in the market, and if that kind of explosive growth takes place, I think all of not just us, but a large number of participants will see this kind of growth. It's good for the country also. But I don't think it's going to happen like that in 2 years, honestly speaking. And we also have another election year coming up next, shortly in 2 years' time. So let's see what happens. I hope you're right. But I'm taking a little bit more conservative view. I would prefer that we see a longer capex cycle, 5 to 7 years, with steady growth, even with 10 to 15% growth coming in every year on the domestic side. That would be preferable to see a longer sustained capex cycle rather than a short explosive one and then again everything goes down the tubes. So, but what's going to happen in the future, I don't know. I can't say. And the second question was on the margin profile. I constantly mentioned that we're not going to add much fixed cost to our company to achieve the higher turnovers. So we are focusing on improving the gross contribution, and we have to go in for another price increases because raw material prices have gone up again in the market, and we have to talk to our customers and get the price increases. There's also a lot of cost pressures coming due to freight. All incoming materials, the cost of bringing it into our factory has gone up. So there is another round of price negotiation that we have to do with our customers. And our goal is to bring the gross contribution, increase the gross contribution to where it was in the past. It may take, we'll start seeing the impact in Q4 itself. And next year we should see the full impact. So this is the direction in which we're going. The rest of it can be calculated quite quickly on an Excel, using an Excel sheet.
So can I ask one more? On the generator side, the market was a certain size and we had a certain large market share. Is there any changes in the industry dynamics in terms of the size and the market players and market share, or so far what we see is a more stable market specifics for us?
Yeah.
Question to Vinay to answer.
Yeah, hello. My name is Vinay. So basically, yes, the market size has changed. Earlier, we used to get many generators above 30 megawatt up to 60 megawatt. Now the range has changed and the number has increased. So now mainly it is from 5 megawatt to 30 megawatt. These are mainly going for the distillery plants, which are coming up rapidly, for the expansion plants and the greenfield projects. And next is the garbage burning plants, then waste heat recovery from the steel plants, and the cement plants. So these are the four major sectors, and the higher ratings have come down, and mainly what we're getting is more number of generators in the lesser capacity.
And the size remains at 2,500-3,000 crore?
Pardon me?
The size of the market?
Size of the market has increased.
Okay. And players are the same, or are there any changes there?
Players are the same.
Okay. And I just want one more clarification. On the railway side, we already have a 600 crore order book, but yet we mentioned somewhere in the opening comments that we will start supplying in Q4 and then 6 months as a trial order, and then 6 months down the line we will get some orders. So I was just confused here. We already have 600 crores, so I couldn't match the two things.
Yeah, there are two segments. One is basically what we have with the current customer. That is actually joint venture with the Indian Railways. Next, what Nikhil told in the call is a new segment what we are entering, that is directly Indian Railways. So we already have the order, and we are in the advanced stage of production, and we will be supplying by this month end the first prototypes. And that will be fitted into the train, and it will be tested for 6 months. Then we become a regular supplier, and then this business is going to grow. So these are two different segments. We are not talking about that 600 crore pending order. This is a new segment.
Okay. Understood, sir. Understood. Thank you very much, sir, and all the best, sir. Thank you very much.
Yeah, thank you.
Thank you. A reminder to the participants, please limit your questions to one per participant. The next question is from the line of Bajrang Bafna from Sunidhi Securities. Please go ahead.
Congratulations for the numbers. Nikhil, just one question.
Mr. Bafna, sorry to interrupt, but your voice is breaking up. Maybe I request you to move to a better reception area, please.
Is it audible? It's fine now?
Yes, better, but okay, we can hear you.
Yeah, just Nikhil, we are hearing from a couple of your competitors also that the demand from overseas market because of China's is also coming to India. So are we seeing some traction on that side, and we are going to capitalize on that opportunity?
So you're saying our competitors have mentioned that there is, then your voice got broken up. What can you please repeat that part once again, please?
Yeah, the China plus one strategy. Are we seeing some traction on that front?
Sorry, not audible, sir.
Mr. Bafna, may we request you to rejoin the queue once again, please?
Yeah, sure.
Thank you. The next question is from the line of Anish Jobalia from Banyan Capital Advisors. Please go ahead.
Yeah, hi sir. Good morning to the team. So congratulations for a good quarter, upping of the guidance and also good cash flow generation in H1. To restrict you to one question, so one of our key customers in the domestic market is looking at becoming aggressive in the 30 to 100 megawatts of steam turbine segment, especially in the international markets, after having recently acquired their stake from the JV partner. So, sir, the question is whether we will also benefit from this aggression of our customers in the international markets, and how is this 30 to 100 megawatts market shaping up in the domestic market?
Yeah, I think we know who you're talking about. They are one of our most important customers, and we hope to grow with them both domestic as well as export. So I think we should hope for the best.
Okay, and in terms of, sir, the new initiatives that we are working on, like the synchronous motors, also railways, as well as the aftermarket, and probably that growth could also come from this 30 to 100 or the higher generator segment. So how do you, sir, see the gross margins moving beyond the 32% that we hope to establish by Q4 over the next 2 to 3 years? Directionally, do you see this improving further, or we will kind of remain at this 32% range? I mean, what's your directional thoughts on this?
First step is to bring it to 32%. And then, by improving the product mix and trying to increase the aftermarket business, we can hope to improve it further. But, we need to balance it out with the market competition, and it's a combination of a number of factors. So first step will be to bring it to 32%. We'll obviously be in touch with you every quarter, and we'll keep you posted in the progress.
Okay, sir, fantastic, and thank you very much for your time.
Yeah.
Thank you. The next question is from the line of Aditya Shah from Vibrant Securities. Please go ahead.
Good afternoon, Nikhil and team.
Good afternoon.
First of all, I want to congratulate Nikhil, to you, and how we have reinvented the company from heavy domestic focused steam turbine to building an export franchisee, and then building a railway franchisee, and now building a aftermarket franchisee. I think one of the best management that I've seen in the liquid space, and I really heartily congratulate that as a shareholder of TD Power. And secondly, the kind of cost control that you have shown gives huge confidence in light of the pressures on gross margin that we have seen. I think that has been more than compensated by a fantastic cost control culture in the company, and again a big kudos for that. And so after that, maybe I can just ask two questions. One is on the gross margin. Do you think that next year for FY23 we can target a 32% sort of number in terms of gross contribution, or do you think that could be on the lower side? And number two is, I want to understand what is our market share ex-India globally in terms of whatever ranges and machines that we target, not the overall market, but the target segments which we have. Within that, what would be TD Power market share? Thank you.
First question, gross contribution. We have to get to this level. We have to do a lot of work to get there, and that's the goal of the management team, to try to bring them to get the cross contribution to the level that we discussed. We have to also engage with our customers, and we have to see how to pass on this from further raw material price increases to the market. This is an ongoing process right now. Okay. We will keep you updated, but the goal is to bring it to that level. In terms of ex-India market share, I think we are still single digit.
Single digit?
Yeah.
Last time I remember you said around 5%. So is it at the same level? Has it gone to 6-7%? Any color on that directionally?
I have not done that calculation recently to see whether it's moved from 5% to 7 to 6%, but it is in that range still.
Okay. And do we have any specific targets to reach, say, 10% global market share? Do we think in that way, or is it order by order, customer by customer? That's how we approach.
We have a plan to keep increasing our sales year on year, export sales year on year, by adding new customers, adding new verticals, and also by cutting deep into existing markets. So overall, I think we could, looking at the pace of progress in the past few years, I think if we are able to get 10 to 15% growth every year, that would be really good. So that's what we can expect.
Got it. Thank you, and all the best.
Thank you.
Thank you. The next question is a follow-up from the line of Dwanil Desai from Turtle Capital. Please go ahead.
Hi, Nikhil. Nikhil, you in your opening remarks, you talked about this order for shell gas from US for 10 machines, and you said 15 megawatt, right? So can you elaborate? Is this a one-time opportunity or a new area or application that we have cracked? How should we look at that?
So this is actually from a gas turbine manufacturer owned by Caterpillar, and they are the leaders in this industry for decades. This product has been delivered under development with them for the past 2 years. We supplied developing products to them already, and then they have won the first big order in the market for supply of these 15 megawatt generators for the shale oil business. This is just the first order, and with the oil price remaining where it is right now, $80-85 per barrel, we're seeing the investment cycle also pick up in the oil side, and oil companies are flush with cash. So I feel this would be the beginning of a capex cycle maybe in the oil industry also.
Okay. So this is a new application that we have entered into. Is that the right way to look at it?
We were earlier supplying 6 megawatt machines to the same application, and this is now been taken to 15 megawatt. So this can now cater to the very large wells, and we are in both the segments, both 6 and 15. 6 megawatt, which was with a different company, and this is with a different company. So we are really in this power units for the shale gas industry. TDPS has a dominating market share right now in the US.
Okay. Oh, got it. And second question, Nikhil, on railways. So we already have 100 crore, run rate from the existing customer, and we are vying for the new business from Indian Railways. So in 3 years, do we see the railway business reaching 200, 250 crore kind of a number? With kind of our partnership with new private players also, we are working on it. So how should you, how do you look at it?
Yeah, I'm Vinay. So I will answer your question. So as I said, now we are in the advanced stage of manufacturing the prototypes, and we have to dispatch by this month end, and it will be fitted to the trains, and they will do the trial run for 6 months. So after that, then there will be numerous tenders, and we have to participate in the tender, and then we have to become L1 or L2. Then based on the your category, whether it's L1, L2, L3, L4, then they divide the business among the participants. So we are seeing around 200 crore opportunity total, including existing.
Including existing. Okay. Yeah. Thank you. Thank you.
Thank you. Ladies and gentlemen, we take that as the last question for today. I now hand the conference over to the management for their closing comments. Over to you, sir.
Yes, thank you everybody for joining us on this call. If you have any further questions, please feel free to get in touch with us and our investment relations team as well as our CFO. We look forward to interacting with you in February at the end of the next quarter. Thank you.
Thank you. Ladies and gentlemen, on behalf of TD Power Systems Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.